Now, the Eurozone, as we've seen, is still fighting off the recession, but the global economic forecast is looking much stronger. A new World Bank report says the global economy is likely to grow by 2.2% this year, 3% next year, and even more the year after. Andrew Burns is the author of the Global Prosperity Report, and he joins me now. Welcome. It's not too often we get, the report's titled the Global Prosperity Report, but I would like to change it to the Optimistic Report. It's been a while since we felt optimistic with the doom and gloom that the headlines usually have in the news. Let me start with the basis of the risks. The beginning of your report talks about the risk has eased. Talk to us more about that.
Well, I think that's exactly right, Philip. I mean, I'm not sure I would call it the Global Optimism Report. I think it's a fairly careful analysis of the situation. But what we do feel is that the major risks, the sort of cliff events that we've talked about have been our focus for the last several years, are pretty much behind us. The problems are still there. Not all of the solutions have been found, but the likelihood of us really going into a major crisis coming from the high-income countries is greatly reduced. And that's important to recognize because it means it's time for the developing world, but the high-income world as well, to start focusing on some of the long-term policies that are going to be necessary to sustain growth at high levels going forward.
You talk about the growth rate this year, 2.2, and then 3, and then 3.3 in 2015.
Right.
Is that a base case scenario, or would you consider that? How did you come up with those numbers, and what are the assumptions you used?
Sure. Well, that is the base case scenario. It's one that we see as broadly a central forecast, so we see there being upside risks as well as downside risks. It's one where we see developing countries, for example, growing relatively strongly, 5.1% this year, 5.6% next year, 5.7% in the years to come, whereas high-income countries continue to struggle with much slower growth, 1.2% this year, and only firming up to about 2.3% by 2015. So it's a fairly somber picture at some levels because those growth rates are much slower than the growth rates that we saw in the pre-crisis period. But it's something that we think sort of represents, for the developing countries anyway, something like a new normal going forward.
What's your greatest concern?
Well, we've got a number of concerns, and I think there's sort of emerging stories, and in some sense, the greatest concerns are less great than they were in the past, and that's part of the optimism story you're talking about. What we're looking at as areas of uncertainty and therefore risk for developing countries is quantitative easing in Japan on the one hand, but also quantitative easing, the tapering off of quantitative easing in the United States, because that's something that's going to tighten conditions, raise interest rates, and potentially, particularly in East Asia and Pacific, where we've had a lot of sort of very strong growth, a lot of investment, big increases in borrowing, there's a potential that those higher interest rates may expose some vulnerabilities that to now, anyway, have remained hidden.
On our show, we often talk about the data out of Europe, which has been mixed. The U.S. data arguably has been a little bit better than expected, and in Asia, it's still some bright spots, some weak spots. Are you saying in the report that the mixed economic data that we've seen in the last few months, that's temporary?
So what we're saying is that the situation from the high-income countries, which is very much this mixed story, sometimes we get good results and everybody's sort of, okay, it's getting better, and then we get a less positive story. I think we're going to see a little bit of that going forward coming out of the high-income countries. You really are exiting a very difficult period in the euro area. That's our expectation. So growth there, negative this year, turning slightly positive in 2014 and stronger in 2015. But as you go through, it's not going to be a smooth process.
Remember, 5 years ago when the Bear Stearns blew up and then Lehman blew up, and there was all this talk from economists about how countries have to deleverage, the consumer has to deleverage, everyone has to deleverage, which means that we stop the spending and we pay down the credit cards, we pay down the mortgage, and there wasn't going to be all this money out there to spend money on stuff that you can throw in your garage. What happened to all this deleveraging that was supposed to take place, and how is the health of the consumer today?
Sure. Well, a lot of that deleveraging has occurred. If you look at the data for the U.S., it's pretty clear. The banks are in a much better situation than they were. They stopped lending for an extended period of time. They've recapitalized. Those are very positive conditions. They've allowed them to start to get involved yet again and help to support the recovery. Same thing happening in terms of households. Debt levels have come down to more manageable levels. All of that's supported by very low interest rates. And of course, as those interest rates tighten, then there will be a braking effect. The euro area, similar improvements observed there. Perhaps not as marked, not as far along in the restructuring process, but nevertheless, we think that the bulk of that slowing effect is behind them, and that's partly why we see growth accelerating.
Well, on behalf of all the investors around the world, I want to thank you for joining us. A fascinating topic. I'm sure they hope that you're right, or better yet, they hope that you're under-reporting the growth in the coming years.
As do I.
Andrew Burns, World Bank, thank you very much.